Hi everyone, my name is Roshni Patel and I'm here with Lars Christian Haugen, and this is the HP Value Investing Show episode number 4, where we'll be following up on one of our prior investments, Fevertree. Thanks for checking out this video, and as usual, please like our video and share it. We also have a YouTube channel, Haugen Patel Value Investing, if you would like to check out more of our content. And Haugen Patel is one word for those of you who are not sure. You can also go to our website, which is www.hpvalueinvesting.com, and sign up for our newsletter there. And you'll be able to see more of our reports and videos on that page too. And finally, you can follow us on eToro.com, the social trading platform. And there you can copy our portfolio under the name HP Value Investing.
Okay, so here we are. And let's just quickly jump into the backstory so that you can get some context of why we're doing this presentation. So Fevertree, they sell premium mixers and sodas to bars, restaurants, and to supermarkets. And we invested in Fevertree in March 2020 at £9 per share. And we bought it in our personal portfolio. So we had not set up our eToro account yet, so you won't find it there. And our profit to date is around 160%, which is, not bad for 1 year. However, we plan to hold this investment for the long term. So anything can happen going forward, and it's really the long-term return that matters. And we also wrote a report on Fevertree, and you can visit our website to see that. And Fevertree recently released their results for 2020, so that's why we are doing this update on the company. And you can also see here on the chart here that the little orange circle or red circle is where we bought the shares. Okay, so moving on to the next slide, we're now going to talk here about market trends to get a little bit of a sense of where the market is headed. So there are 4 charts here in this picture, and there are 4 bullet points. So there's 1 bullet point for each chart. So let's start with the chart in the upper left-hand corner. Over the last 5 years, spirits grew faster than beer and wine. So beer declined by 0.4% per year. Wine grew at 0.2% per year, and spirits grew at 1% per year. And we mentioned this because Fevertree is a product that is aimed at people who drink spirits. And in the upper right-hand chart, we can see that this trend is expected to continue over the next 5 years. And in the bottom left-hand chart, we see that over the last 9 years, the premium spirits have taken a larger part of the spirits market. And this is significant because Fevertree is a premium product that is often paired with premium spirits. And we can see here that, as an example, in 2010 in the UK, premium spirits made up 9% of the spirits market. And in 2019, it made up 17%. So that's a healthy growth. And lastly, in the bottom right-hand chart, we see that from 2012 to 2019, Fevertree's sales outpaced both mixers and premium mixers by a wide margin, growing at 50% per year, which is very good. So the takeaway from this slide and from the Fevertree earnings call, if you decide to listen to that, is that the strong growth trend in premium spirits, premium mixers, and especially in Fevertree are set to continue into the foreseeable future.
Right. And here we will review the key management updates over the last year. So since the pandemic, the management have acted proactively thanks to what they call their flexible business model. So for example, when the pandemic started last year, Fevertree set up a new team to specifically redeploy the budget and priorities in response to the pandemic. And what this means is spending was reallocated from the bar and restaurant market to supermarkets and advertising, as supermarkets remained open during lockdowns and more customers could be targeted with marketing campaigns this way. Management also transferred employees to remote home working, and this allowed the business to continue operations during lockdowns. And this might sound minor, but business continuity is important in maintaining the first mover advantage as a premium mixer pioneer. And finally, we look at the customer support. The business also reached out proactively by offering customers payment freezes, extended terms, and payment programs and such like. This strengthened customer relations. So to summarize this slide over here, Fevertree's flexible business model allowed management to reallocate the budget when the pandemic started, continue day-to-day business by enabling staff to work from home, and offer flexible payment options to its customers. And this allowed the business to repivot their strategies and staff, as well as strengthen customer relationships. Now you will see how Fevertree have moved in the competitive landscape. So we think that Fevertree have maintained their competitive first mover advantage. And last year, they launched their first national TV campaign. I think this was Channel 4. And they also launched virtual drinks making masterclasses, both to keep the brand in the customer's eye. While 2020 revenues were hit by the pandemic and reducing the sales to bars and restaurants, the revenues in the second half of the years actually increased. They have increased their store presence, and during 2020 actually became the first brand to have a mixer-led spirits collaboration with a UK store, Sainsbury's. And what this collaboration did was emphasize Fevertree over the recommended gin partners. And what this means is Fevertree have again proven themselves to be a market leader.
All right, so moving on to the financial highlights of the year. So, unsurprisingly, the sales to bars, restaurants, and the like were hit by lockdowns, but sales to supermarkets actually did well. So, in total for the year, revenues were only down 3%, and the only geography that had a negative year was the UK. And we think that's because the UK is a more mature market, i.e., it doesn't grow that much, but in other countries, they could ramp up their supermarket sales and be in positive growth for the year, especially in the US. And moving on to gross profit, it fell 12% year on year, and the gross margin fell from 50.5 to 46.2. And one reason was because they spent money on figuring out better pricing for their products in the US. They seem to have priced themselves a bit too high, and they lowered their prices to make it a bit more, to make it more of an affordable everyday treat. And it cost money to do this research and to reposition themselves. And three other factors that they mentioned contributed to the lower gross margin was that there were currency headwinds, so the US dollar was weaker, and they acquired a business in Germany called GDP, which has a lower gross margin, so that diluted the Fevertree's gross margin. And also the third point is that there were obviously COVID-related closures, but they expect the margin to rebound in 2021 and 2022. So this doesn't seem like it's permanent. And then also the adjusted EBITDA fell 26%. I mean, we're not huge fans of using adjusted numbers, but we are using them here for convenience because this is what they presented. The reason EBITDA fell so much is that Fevertree increased their staff costs in 2020. They didn't take any government support during the pandemic, and they actually decided to hire more people, increasing the headcount by 89 to reach 259 people. And as we mentioned, they also acquired the distribution business in Germany called GDP. And Fevertree says that this is a good strategic move to capture the big opportunity in Germany. And they have worked closely with the GDP for many years, so it makes strategic sense. They know the business very well and the management. And we are not usually fans of acquisitions because more often than not they don't actually work out. So we will see how this pans out going forward. And then in the end, diluted earnings per share fell 29%, and that's a result of all the factors that we just mentioned above. And also that amortization increased as a result of the GDP acquisition, and depreciation increased as a result of what they say is investing in a reusable package system in Germany. So all in all, I mean, the financials aren't that bad considering that sales only fell 3%, but then because they invested in the business and hired more people, etc., the final net income figures or diluted earnings per share were quite a lot lower, but this doesn't seem to be something to worry about, and that will probably rebound in the future. All right, so let's jump into the valuation, because I'm sure there are several people wondering what the company might be worth now, taking the pandemic into account. And the first thing we should point out is that it's difficult to perform a valuation because of the disruption that the pandemic did to the cash flow. Nevertheless, we tried our best, and we took the 2020 free cash flow number as our starting point, which is 35.5 million, and that's actually a 46% drop from 2019. And we conducted several scenario analyses, and our valuations range from around 13 to 23 per share. Now, we won't go into detail just because we want to keep this presentation relatively short, but that's the range we have. And so what is our takeaway from this? And our takeaway is that, we already own shares and they've gone up a lot in value. So we don't feel the urge to buy more at the current price because they're not trading at a discount to fair value. But we also don't think that they're trading at a huge premium to fair value. So we're not looking to sell either. So basically, we will just stay put. We will hold our shares and do nothing else for now. And if the share price falls, maybe let's say below 15, we might start getting interested again in buying more shares.
Lovely. That takes us through to the overall conclusion. And our conclusion is that the company is doing relatively well despite the pandemic. The market trend seems to be positive, and Fevertree is likely to do well in the foreseeable future. The management, we think, performed pretty well during the pandemic, and the company has maintained its strong market position. During the year, it made moves to further strengthen its position by making a strategic acquisition, by hiring more people, and by increasing their brand awareness despite the weaker sales. And we bought shares at around £9 during the pandemic, and we're not looking to buy more shares or sell our shares around this time. Our intention is to hold the shares for the long term, and if the share price should fall, say around £15 or lower, then we'll consider buying some more.
All right, so that summarizes, or that kind of wraps up our presentation, and we hope you enjoyed it. Again, thanks for watching, and please like and subscribe. Follow us also on eToro if you want to see our investments in real time. And yeah, that's it. Thank you.
Thanks very much. Bye.
Bye.